Well, hello. This is Rob. Good morning to my U.S. and Canadian traders. Good afternoon to European traders, and good evening to our traders in Asia. Here we are, U.S. payrolls, December 2nd. We are about 12 minutes away. Let's talk about what we're expecting. Over the last couple months, we've actually seen the job creation come down quite a bit in the U.S. Remember, this is exactly what the Fed wants. The Fed has told us it wants to get unemployment rate up to about 4.3%. Right now it's at 3.7. They want to get the jobs market a little bit less strong, and this is what we're saying. We are seeing 261,000 jobs in October. We're looking for 200,000 in November. So those are the estimates. 200,000 jobs in November, 3.7% unemployment. We've been talking about this for the last, about 5 or 6 months now. Good news is bad news, and bad news is good news. What the market wants is it wants a weak jobs report. Pretty much any other time in trading, this would be not the case. A bad jobs report means the equity markets should go down. A bad jobs report today, the equity markets will likely go up because it tells the Fed that they can back off, which is what the market wants at the moment. So we'll have to see what happens here, but let's jump into just quickly trading news. When you're trading news, there's basically 3 ways to do it. You can enter before the trade or before the news comes out. This is the greatest reward and greatest risk. You can enter on the news. This is kind of splitting it in the middle. Okay, let's get in right when the news happens. We'll have some resting orders out there. And then the last one, the safest but the least amount of reward, is the second stage entry. I'm going to be doing a second stage entry on my trades today, but let's quickly go through why we talk about all these things. Slippage is a big deal around news announcements. Whenever there is a news announcement, you can get a very, very big move that happens very quickly. And if you have a stop order at 183.10 here, you're going to find out that you don't get filled at your stop. Your stop says, when it gets to this point, then get me out. Here's the problem is when it gets to 183.10, get me out means get in line. Get in line to get out. By the time you get out of the door, there might be significant slippage in your order. This is one of the big risks of trading before the news and trading on the news, is that these stops are going to get triggered and they're going to have a lot of slippage, and sometimes you may have a lot bigger losses than you expected. Also, we get whipsaw action. This is very common, and this is very common on the payrolls report. This is why I like to use a second stage entry on the payrolls report. As you can see, look at this big candle. If you get in here, you get stopped out. If you get short, you get stopped out. Everyone got stopped out. The range was so large on this move that everyone, long and short, anyone that had a stop within, 0.5%, 0.75%, they got stopped out. It didn't go anywhere, but everyone got stopped out. So these are the risks. Make sure that you understand when you are trading news events, understand these risks. This is where we're going to be using our stop limit orders. And we're going to be putting in a few of those here in just a second to control our entries exactly where we get in. So I'm going to be using a second stage entry today because let's take a look at where we are in the markets. I'm going to start off quickly here with dollar. So overnight, and I'm going to go to an hourly chart here so we can see a little bit more. I'm going to take off these Bollinger Bands here. We'll talk about those Bollinger Bands in a second. I did the daily recap yesterday, and I said, look, I would love to see the dollar pop up. I would love to see the dollar actually strengthen overnight and the yen weaken. And that is not what happened. The yen strengthened quite a bit. So the yen basket is up 0.75% since 5 p.m. Eastern time yesterday. So the yen had another big move overnight. The dollar fell 0.3%. So that means that the dollar yen, as far as a basket is concerned, it moved 1% overnight. Let's see what dollar yen actually moved overnight. About 1%. So the dollar yen has had a big move. So when we take a look at the dollar here, we're kind of at extreme levels here. When we take a look at all of these metrics, We've had big moves down. Our RSIs are all the way down to 24. And if you take a look back, anytime you get this RSI this extreme, you're typically near a bottom. So I'm looking at this pair. I wanted to go short dollar yen on the news announcement, but it's just too overextended at this point. Take a look at yen. We're seeing the same thing. The yen relative strength is up to 74. You can see that whenever it gets up to these extreme levels, it tends to be near a top. Here's the problem. Everything's saying to be long dollar yen. That's not what I want to do. That's not where I want to be. It would be a very, very big counter trend trade. I'd basically being against the market, against the trends, against everything, and saying, I think there's going to be some sort of reversal. So that's not what I'm going to be looking to do because I don't really love counter trend trading. So let's talk about some potential trades here. Remember, I'm looking for a second stage entry, which means I'm not looking to get in right on the announcement. I want to be waiting for an opportunity after the news announcement comes out. So right now, dollar yen is overextended. And this is the one I really want to play because the dollar and yen are very, very negatively correlated right now. This is where the biggest move is likely to be. So looking at dollar yen, we're down here at 134. We've had a big move from 140. I mean, that's just a monster move. That's a 600 pip move in really the last 3 days. If I was a counter trend trader, I would absolutely be licking my chops at this, saying, you know what? I think the risk reward says that there's going to be a bounce in dollar yen here. Again, like I said, we're at extreme levels. We could always fall more, but everything's telling me that we're at extreme levels here. I'm not looking to trade right on the announcement. I'm looking to trade after the announcement. So what I would love to see is a little bit of relief. So if I could write the script of how this trade goes, I would love to see a jump. I would love to see dollar yen have a big jump after the news announcement, because then that would take it from extreme levels. That would relieve some of this pressure off it. And when I entered into a short dollar yen trade, it would be at a much better level. We wouldn't be at such extreme levels. So that's really how I want this trade to go. I don't know what's going to happen on this announcement. We'll see. The other trade that I do like is a counter trend trade. So let's talk about this. So right now, I feel like dollar yen is at extreme levels. I don't want to go short here, but I don't want to do counter trend trading. Let's say the dollar yen cross. Let's say the news comes out, the dollar yen cross plunges another 1%. All of a sudden, that's such an extreme level. I think the risk reward makes sense. So let's just kind of go through what I'm looking to do here. If we get a further drop, I'm going to be looking to make a counter trend trade, which I don't do it a lot of times. But again, we've seen a roughly 5% move in the last 3 days. If we get another 1 to 2%, I'm okay doing a counter trend trade in that expectation. If we get a big jump in dollar yen, I'm looking to short that at some point, probably 15, 20, 30 minutes after the news event. So I'm not looking to do anything immediately. I'm going to be looking to react when this comes out. So let's take a look at some actual levels here. I'm going to go to an hourly chart here. If let's do the short scenario first. So where do I want to see it? I would like to see it back up into this area, this range of that we saw earlier, where we had this pretty long base. So I would like to see a jump up to at least 135. So if we get above 135, I will be looking for some candles to start to tell me that, hey, that pop has run its course and we can now enter a short at a place that is not such extreme readings. On the downside, I need to see a plunge below this low of 133.5. That's going to be what I'm looking for. Boy, I don't really see anything below that. So A plunge below 133.5. I'm going to be waiting and watching for some signs of reversal. Again, I want to see, I'll go to a smaller time frame, probably like a 10-minute, 15-minute time frame, and go from there. Okay, so we have the announcement. The announcement is out, and you can see we're getting this jump. So this is what I talked about. I didn't want to be short. It was at such extreme levels. I want some of the pressure taken off this pair. Here we are. We're close to 135. That's what I said. I said I need to see this thing come up to at least 135. Okay, so my second premise was if we get a big fall on the announcement, I want to be looking for a counter trend trade. That is off the table. That premise is completely off the table. And so the only trade I'm looking at for a setup was the first one I talked about, which was I want to see this thing pop. And then I want to see once the momentum starts to fade, I want to go ahead and make a short dollar yen trade. Let me check in on the actual numbers. Actual numbers are 263,000 jobs were created. That's basically the same as we created in October. That was not the number the market wanted. The market wanted some weaker news, so we are seeing the equity futures sell off. We are seeing the dollar pop. Unemployment was at 3.7%, as expected. Look, this was a stronger than expected report, but it wasn't that much stronger. So this is really the scenario I wanted to see. This is, like I said, if I could have written the script, I want to see a pop. I want to see a pop to relieve that pressure off of dollar yen. And then once that pop is done, I want to go ahead and play it for a fade, to fade this pop. And when I take a look at the news is strong, but it's not so strong. All right, I'm going to come in here. I'm going to go to a little bit shorter time frame. Like I said, what I want to see is I want to see the momentum fading. The momentum fading off this big jump. I have no idea where this is going to stop. No one has any idea where this is going to stop at all. And anyone who says they do, they have absolutely no idea. So let's start building some orders here. And put in a stop order here. So sell stop to get into it. And again, let me attach my stop order to that. All right, so here we have, I've got my order ready, and this is set for 100 pip stop here. I'm going to change this here in a second. But again, what I'm looking at is if I enter off of this, I want to have my stop attached. I'm going to put this at certain levels. I can either use a prior swing high. I can use some other again, moving average or something. We'll talk about that in a second. You can see this thing is not yet done. This thing is still has momentum to the upside. I do not want to step in front of a moving train. I do not want to step in front of this while this thing is ripping shorts faces off. I want to get in when this thing has had its little pop, had its run, and it's cooled off, and then I can have a much safer entry. And look, it might be at a lower price. I don't care. This isn't about getting the best price. This is about having the safest entry. And right now, the momentum is still ripping to the upside. It's still ripping to the upside, so I'm going to be very patient here. I'm just going to wait. And once this thing finally does lose some momentum, we'll see it in the charts. I'll take a trade, and it may be stopped out for a loss, but it may not be. We'll see. All right, any of the pairs people want to look at, let me know. I'm going to pop into TradingView here and just see what the rest of the market is doing. Equities are down. Boy, 1.5% drop in equities. That is a steep drop in the equity market. NASDAQ down even more, 2.2%. And sure enough, dollar yen has turned around quite a bit. We've gone from being negative to positive here on a day. So the other currency I did like was Kiwi, but this is not going to be a good report for Kiwi. I did like Kiwi long. It was showing some relative strength. It's still showing some relative strength. If you were in, like short Aussie Kiwi, which is a pair that I've liked, you can see there's still a lot of weakness here on Aussie Kiwi. But the big trade to me was dollar yen, and that's where all the action has been for sure. What I'm looking for here is I'm looking for just some loss of momentum. I'm looking for a loss of momentum here. At this point, I'm not seeing this. We still have more momentum to the upside. Take a look. We have RSI. Now, look, I'm on a 15-minute chart now. We're getting RSI now to extreme levels on the upside. If we go to a 1-hour chart, we're now starting to get RSI more extreme on one side than we were on the other. Just simply waiting for this to lose some momentum, and then I'll take my shot, adjust my stop for some technical places, and that's the trade. All right, I'm just talking now. There's nothing really to talk about other than what we've already talked about. If you guys have any questions or you want to take a look at any other pairs, let me know. This is where hopefully the one thing you took away from today's session was extreme levels. When things get to extreme levels, they tend to reverse at those points. And that's exactly what we saw here. Is we saw, okay, we're getting to extreme levels on one side, and now we're just simply getting to extreme levels on the other side. Just always be thinking that things can always go against you. And when we get to extreme levels, that's when you get the biggest moves in one direction. Oh boy, I feel like if we sit here, we may not even see it. And understand, I may not even make the trade here. Very rarely do I do this where I am purely discretionary. And you guys have known me for years. Everything is very well set up with certain levels, certain points. And whenever we trade these news events, certain levels and points. This one, it's definitely a different one. Trading this fade here. All we're looking for is this thing to stop ripping the faces off of anyone who's short. And then it's a much, much safer entry. Just a much safer entry at that point. All right, so we've got this big spike here, and we got right up into these levels. So let's start looking at some potential levels here. We've got 130, let's just call 136 was the high of this candle. 136 was the high of this candle. I talked about wanting to be in this 135, at least above 135 area. So if anyone said, hey, you know what? I like this trade here. I'm going to enter it here, put a stop in at 136. I've got no problem with that trade. No problem. This is, again, it's a counter trend trade to the current short-term price action. And counter trend trades, you kind of pick a point, and the reason you make them is really for the risk reward. That's the only reason you would ever make a counter trend trade, is that you say, hey, look, my risk is 30 pips. My reward is 250 pips. Then all of a sudden, you can make these kind of trades because you're really saying, hey, you know what? I think it's worth it just because of the outsized risk reward. You pick a point, you pick a stop, and it either works or it doesn't. And if you take a look at most like professional traders, their counter trend trades will be a lower win-loss than their regular trades. But the win-loss percentage and the profit factor is much, much higher. So look, and let's be very clear here. If you were to take this trade, if you aren't looking to capture at least 150 pips, it's not worth making the trade. That's how you have to take a look at these counter trend trades. I know it's a dumb trade. I know I'm stepping in front of a train going the other way, but I'm doing so because the reward is so great. So what that means is if you're going to take the trade, don't chicken out and take your profits when you have 20 pips, because now it makes no sense whatsoever. You made a counter trend trade, you stepped in front of the train for a nickel. It's not worth it. If you're going to take these kind of trades, you have to be looking at this saying, I'm looking for this to go all the way back down to at least 134.5. I think we're going to lose all of our gain that we have. And I just don't see that big of a reversal happening on a Friday. We'll see. We'll see. But that's kind of, again, the mindset you have to have on these counter trend trades. The only time you make them is when you are saying, it is worth me stepping in front of the train because there is a huge payoff. If I'm right, and I will stick with my stop. If I'm wrong, take my small loss, move on to the next one. As you can see, this thing is hanging out near the upper end of this range, meaning that it probably wants to break out and go a little higher. This is telling me that this trade isn't going to happen anytime in the next couple of minutes. All right, Steve asked a question, wait and see how the first 15-minute candle close. Yeah, look, first 15-minute candle close, pick your points off of that. I think that's a very decent strategy. But remember, this trade is, and I'll say this again, most of my trades are very well defined, very well set up, very well with levels. You guys have known me for years. This one's going to be a complete shot in the dark. Again, I can't justify any technical reason to enter here on the short. I can't justify that. The only way I can justify a trade is, hey, I think the risk reward is so compelling that I am going to make it with the hopes that I'm going to step in front of this train moving in the wrong direction and get my timing right. And I think it's worth doing because there's such a big reward there. That's the only reason to make this trade. And if that doesn't fit within your personality and what you want to do with your trading, then walk away. You don't need to make this trade. There's no reason to make this trade. Yeah, I like that idea of just 15 minutes. All right, Eddie has a question. Are there certain news events that normally whiplash markets up and down? I wish I could point to one report that has lots of whipsaws. It's really dependent on the current market environment. Like if this was 1 year ago, the payroll report wasn't that important a year ago. And so the more important something is, the more intense the expectations are, I'm going to say that will tell you that we're in for big volatility. Now, again, you're talking specifically about whipsaws where you get big volatility up, big volatility down. No, I can't tell you there's anything out there in any way to tell when that's going to happen or when it's not going to happen. That's just completely random. But we definitely can know when we see a heightened volatility, a heightened expectation. And this is just the marketers telling you, hey, these are the big things. Like recently, CPI report has been just a big, huge trade. The CPI report was not a trade for almost a decade. From 2000 to 2020, the CPI report, no one cared about it. And so these things kind of jump in and out of what the market wants to see. And so there's really just have to just stay up on the market. But there is no way to tell which one is going to whipsaw the most. There's just no way. It just changes every time. And that's what you have to admit. That's what I love after 25 years of being a professional trader. I truly just shrug my shoulders and say, I have no idea. I have absolutely no idea what is going to happen. None whatsoever. And when you have that idea, then all of a sudden your trading is different. When you truly say, I have no idea, but I'm going to take these shots because I think the risk reward and the win-loss is in my favor, and we did that based on charting techniques, all that other stuff. All of a sudden, you now understand, I'm going to take some shots. Some are going to be losers, some are going to be winners. And you no longer have this big focus on each individual trade. It's more of, hey, I'm going to make 10 of these trades. I'm going to throw 10 pieces of you know what up against the wall, and 6 of them are going to stick. I have no idea which one of the 10 are going to stick. I'm just going to make them. If they fall off, hey, they're losers. Some will stick. I'll make some money, and hopefully I'll have a profitable record after those 10. That's trading. So at this point, yeah, we have no idea. We have truly no idea what's going to happen. I'm going to sign off here in a second, but you can see the dollar yen does not want to stop. It does not want to stop. But I think you can see that 136 136 is acting as a pretty strong bit of resistance here. If we can get one more candle and we do not break 136, that to me would be okay. I could say now I could now come in and say with a charting perspective and a little bit of logic and reason that 136 looks like it's the top. I'm going to take a short, put my stop up above that, and I will get whatever the market gives me at that point. But you can see we're getting a breakout above 136 at the moment. So looks like this market, this dollar yen wants to potentially go higher. So I would wait for this 15-minute candle to close before you make any decision here on dollar yen. All right, one last question here. So everybody asked a question about the dollar. Is this the end of the move? So let's use the term wave. Is this the end of the wave lower? And it's very possible. So if you go to like a daily chart, we can see here that we've had this big move down. Now this is what I love. I love daily charts. I just love looking at daily charts, because once you get into like the smaller time frames, you start to get this tunnel vision. You zoom out and you can see, oh, look at today's candle. Look how wimpy today's candle is compared to what we've seen. Today's candle looks so intense on a 1-hour chart and so intense on a 15-minute chart. And then we come over here to the daily chart and you're like, oh, well, that's literally nothing. That's nothing. So the question is, can we say that this is the bottom of this wave lower? And I think it's way too early. It's way too early to do that. So here I am on a weekly chart here. We are getting into some support levels. We have had a big fall, but on a weekly chart, you can see, RSI is at 45. We're really not at extreme levels yet. So no, I definitely don't think that we can say, looking at the charts, that this is the bottom of this most recent wave. I just don't think you can say that at all. And when you see these candles, this candle is not all that big. We're not seeing any new swing highs. We're not seeing any EMAs being pierced. We're not seeing anything, no parabolic stars being pierced on the daily chart. So definitely too early to say that this is it for the dollar move weakness. Definitely early. Hey, thanks for joining, everyone. I'm going to take off. Everyone, stay safe out there. Have a good weekend, and we'll see you next week. Goodbye, everybody.